What is going on, everyone? We're back again with another video, and in today's video this will be a trade review of the final hour of the market's trading. Everything that you see here was sent step by step into my Discord, and if you are interested in joining and being a part of the gang, the link will be in the description of the video. And without further ado, let's get into the commentary of this price action. So to start everything off, I want to make this known that I hardly ever trade and monitor price on the 1 minute chart. The only time that I'll watch is if I'm just tape reading live with ICT, taking notes just to annotate what he sees and anything new that I haven't learned already. So that is why I hopped on here to do this. In the morning session, actually, in the AM, I took a paper trade on the hourly chart, which I'm a huge fan of. Executing on the hourly, the M15 and the M5, it's really, those are my bread and butters. But as you can see already, to start things off, I have my limit inside of a breaker fair value gap setup, unicorn. The reason why I thought this was pretty high probability to start off was because, as you can see, I have a red dashed dotted line starting at 1500, which is 3 p.m., the start of the final hour of trading for the market. So price ran sell side liquidity, internal sell side, and then mitigated the 1 hour bullish fair value gap that I have annotated that it tagged, which was an institutional order flow entry drill. And on top of that, that low that it created was a SMT divergence with the Dow that I have shown in the bottom right of the screen, which I also monitor the entire time while I trade. I monitor ES, NQ, and YM, all three together while I trade, and I don't go without that. But this is the setup that I saw for my first entry to get in for longs to take out the buy side liquidity resting at 4149.5. And right now, as I'm just waiting and just being patient with my order being in, I am marking off mitigation blocks that you see here that I marked off, saying we want PD arrays forming inside of the zone for accumulation for the first mitigation block, and then above that for reaccumulation for the second. And those are also going to be take profit and partial points in this market maker buy model. And the reason why I have those mitigation blocks marked off is due to what I've already shared on Twitter. I posted a deep understanding of what a market maker buy model looks like and what you want to look for inside of the model for entries, etc. And this trade actually is a clear depiction of what I shared on that PDF. And everything, basically everything, is lining up to a T. We took out sell side liquidity, internal sell side, and we tagged a higher time frame PD array, the hourly bullish for value gap, and we treated the 3 p.m. price, the 3 p.m. to 4 p.m. price, as we would treat the AM session's equities open. So that 2 minute move, or that 3 minute move from 1500 to 1503, taking out sell side, that would be our Judas swing. And our Judas swing then pushed up, breaking the swing high, creating the bullish breaker, and then having a unicorn set up inside of the bullish breaker that you guys saw, which was my entry. And as you can see right now, I'm making more annotations saying that we have SMT with NQ here. Price should respect that low. So that low that tagged the volume imbalance that I marked off, that should be a protected low. So I moved my stop loss right to that low, and I expect price to hold value above. But getting back to the mitigation block that I marked off with the arrows I put in the PDF saying that you want to see PD arrays form inside of the zones of the mitigation block, which are the bearish order blocks that are on the sell side of the curve. So we were on the sell side of the curve before the 3 p.m. start of the trading hour, and now we're moving. We had a bullish shift in structure, or short-term shift in structure, and now we're on the buy side of the curve. And we're just being patient now after our entry and seeing the Judas with the unicorn setup and the breaker off of the hourly bullish for value gap. Now we're just being patient, and all we need to do is just sit back and relax. And in literally the meantime, while I'm just kind of sitting here watching price, I made a subtle comment here. I said, how do you guys even sit through this and just watch price move like this? Like, I don't know what it is, but like, I think the M1 chart is just disgusting and the least appealing to look at and even monitor, in my opinion. I hate seeing price move as sloppy as this. And like right now, I'm just monitoring the higher time frame, like the 5 minute. I identified a M5 volume imbalance that we used as support, clearly. So that was even more confidence to see price move in our direction, in our favor. So with the risk that I put on and the stop loss that I used, it's really just smooth sailing from this point on. Here right now, I just took a contract off when price went into that mitigation block. That's our first partial. And now just continue waiting. And from this point on, I'm looking for price to then make a PD array inside of this. I annotate, I say I would like to see a fair value gap or a down close candle for an order block entry. And you'll see what ends up happening here. I adjust my stop loss. I move that up right by the M5 volume imbalance. I'm here waiting for price to come down and tag my buy limit. But then, this is what I do all the time, and I wouldn't be able to manage my trades without watching all three at the same time. You can see that the Dow in the bottom right, the Dow mitigated the M1 gap while ES did not. So there's SMT at those lows right there, at those equal lows that you see, because Dow mitigated the fair value gap and ES did not. Therefore, ES was able to run. So that was an entry that I missed out on, but that was completely fine. I was fine with my position. I was completely carefree, no stress at all, and I was very confident in my draw on liquidity because there was no SMT at those highs on the higher time frame. So I knew where price was going to go. And here I have my finger on the trigger ready for them to mitigate this M1 mitigation block. There we go. I take another partial right there, and then I mark off the old M5 order block and an M5 volume imbalance as more PD arrays. Still comfortable with my stop loss. Here's my executions that I just showed right there. Very soon, this is where price starts to mess around, and I believe a lot of people got induced on this. This is going to be a drop in price soon that you'll see. Should be coming up very shortly. It's about, I think, 10 minutes before the market closes. But right now, I'm just marking off any gaps that were inside of this mitigation block that I use as my second area for taking partials. It was respecting it for the time being, but we didn't get any bodies to close above that volume imbalance that I marked off. But right here I said when YM runs the highs, I will take off another contract for ES, because my anticipation was that YM was going to run the high first because it did look closer to buy side liquidity compared to ES. So if YM did run the high first, I would then take off a contract because that would be SMT at the highs. And I would only have one contract left, so it wouldn't even matter to me, because I've already taken out a majority and a big chunk of my position. So it's not like I would be getting hurt. I was already protected enough. So my emotions are completely negative. At this point, I thought that price was just going to run and rip to the highs based off of, as you could see, my annotations from YM on the bottom right. Tag the mitigation block, run into that fair value gap, very, very close to the highs. And then the next candle just gets blasted here. But was I freaking out? No, I wasn't scared. I wasn't scared at all. I actually wanted to buy another position here, and you will see exactly why. I put another contract on, and what did I do? When did I change the chart? I said stops or break even if they do run us. I went to the M15 chart, and as you can see here, what I do, I marked off the old bearish for value gap. And what I say, I said this before, old distribution becomes new accumulation. So I expected that old gap would be used as support. And literally I said, last line of defense here, the old M15 gap can be used as support. And what did we react? We reacted perfectly off that gap. See, price even respected it, the bottom of the gap to the wick, like to the point. That was perfect. That was pure algorithmic precision. And price continues to run here. I bought another position on that dip inside of the gap, and now it's just free run into buy side liquidity, I believe, from this point on. And yeah, I rarely ever trade the M1 chart. I'm so heavy on trading M5 and above. Honestly, it's been M15 and above for me. I've been all about the hourly chart, but I think this was a beautiful market maker buy model. If you want to look at this video and everything with it, the executions and everything, alongside with the PDF that I made of the in-depth description of a market maker buy model, you'll see that everything lines up perfectly. Whenever I take trades, I make sure that I look for the same thing, same setup, lining up with time every single time. My trading doesn't get different. My model doesn't get different. I train the same shit, same setup every time, and that's how I became profitable. And if you can fine-tune your model and be disciplined enough to trade the same thing every single time, every single opportunity that you see, you'll make it in this industry. But with that being said, we're going to cut it here, and I will talk to you guys in the next video. Hopefully you like it, and I'll continue doing more of these. But take it easy, everybody.